Hello everyone, I'm Jack of all trades, and today I want to have a look with you at the different types of investing that exist. So let's have a look and see what type of investor you are. I made a slideshow that can help us go through these topics, so let's have a look. So what are we going to cover today? First of all, we will discuss what you can invest in. We will look at the difference between investing and trading. We will look at the different investing strategies that we're going to discuss. And we will finish off with a sheet discussing on which one to pick. It's good to know that I'm not a financial advisor. Everything I say is my personal opinion. And if you want to invest, also do your own research. So don't just rely on what I'm saying. And if you want to help me out, please subscribe to the channel. That would be much appreciated. Thank you. So what can you invest in? Well, there's a lot of different things you can invest in. They range from stocks to ETFs, options, crypto, forex, and commodities. But you can also think about real estate or very expensive whiskies to invest in. For today, we will only focus on strategies that involve stocks and ETFs. So the other investable items that are on the sheet here will not be discussed. Another important thing to share is that we will be looking at investing and not at trading. So it's not day trading, which is buying and selling within the same day. It's not swing trading, which is buying and selling within a few days or weeks, sometimes months, but we're really looking at investments for the long term. So the focus for today is only on that. So which types of investing do I want to discuss with you? Well, first of all, it's value investing. Then we'll have a look at growth investing. Then we'll look at dividend investing, also known as income investing. Then we'll look at quality investing, and then we'll finish up with index investing, while at the same time making use of dollar cost averaging, momentum, and buy and hold. Dollar cost averaging is that you will keep buying the same stock over time. So when it goes down, your average price will go down, and when it goes up, it will on average go up. Momentum is when a certain stock is following the trend up for certain reasons in the market, and you will follow it. And buy and hold is that you buy a stock and are planning to hold it for the very long term. So the first one is value investing. Value investors, they look at the difference between the price and value, and that's the way they try to make a profit. So when the price is lower than the actual value of the company, they will see there's a chance to make profit and they will go for it. A famous investor doing this is called Warren Buffett. I think everyone knows him. And actually this is what he was doing in the beginning of his investment career. Lately he's been changing into another strategy, but when he started, it was mainly about valuation. So when a company's price was lower than its actual value, he would buy the company and he would sell it when it would reach its fair value. One of the strategies that he used was that of a cigarette butt. He would buy a company that was going down, was not doing so well, but because the valuation was way lower than the value of the company at that moment, he would get the last value out of it. That's why they call it a cigarette butt. An example of a company that belongs to this strategy is Signify Philips, which I used to own myself last year. It's a company that is not growing anymore, but the price of the company back then was really low, so I decided to buy it, and when it reached its fair value, I sold it again. So that was an example for me of using value investing. The next one is growth investing. Growth investing is about companies that have a lot of growth in the future. They usually have a high valuation because the growth is still coming up. They're not making any or barely any profits yet. What is known for this category is that it's high risk, high reward. So if the future growth is not coming, you've paid a lot for nothing. But if the future growth is there, it might grow a lot and then way more than what you've paid for it. So it's high risk, high reward. You should know if you go for this strategy, there's a lot of volatility in price swings because the profits are in the future and they're uncertain. That uncertainty will make the price go up, but also go down. Some examples are Palantir. That's a company that's into AI, into data. They're growing a lot, so that's one of the examples. Another one that's from our portfolio is Basic Fit. They are a fitness school and they are expanding a lot in Europe. So that's another example of a growth company. So dividend investing, it's good to first know what a dividend is. A dividend is usually a yearly, but it can be a monthly or a quarterly payout from the company to you as a shareholder. Not every company does this, but a lot of companies do. It's a part of the profits that they will pay out to you. This is mainly for income-focused investors because you will get the income in cash on your bank account. But it's also good to know that most companies, they will only go for dividend if they don't see any good opportunities to reinvest. So companies with a high dividend, they are usually not growing that much anymore because they're giving the money to you instead of reinvesting it. Examples are really abundant. If you want to have a look at different companies, you can look at the Dividend Aristocrats. Just Google it and you will find out what it is. It's a group of companies that have been paying dividend for, I think, at least 25 years. So that's a good start if you're interested in dividend investing. Famous example is Johnson & Johnson. And another one that is in my portfolio is ASR the Netherlands. The ticker is behind it. The fourth one is quality investing. Well, first of all, what is quality? Quality is a little bit hard to define. It's different per person, but to me, it's a company that is doing really well, has a big moat, can protect its future profits very well, and the money that they invest into the company will give a high return, a high ROIC. Warren Buffett said about this, it's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. This is something we can all learn from. And it's good to know, though, that with quality investing, you're usually going for a company that's already doing well. So unlike growth investing, you usually don't buy very early. You take a lower risk, but yeah, you're going for certainty. So that's what you're getting. If the company will keep doing well and it has a very long outperformance compared to the market, then the valuation of the company is not that important. Because if it keeps growing, you will eventually grow into the PE ratio that you paid for it. So that is totally fine. Famous examples are Ferrari, which is a very big brand and a high quality company, but also Microsoft, which has been doing well for the last 20 years. The last strategy that I want to discuss is index investing. What is index investing? Well, an index tracks a group of companies from a certain area. For example, it can be the S&P 500, tracking the 500 biggest companies in the USA, but it can also be the IAX, which is tracking the biggest 25 companies on the stock market in the Netherlands. Index investing will make you just buy a bunch of companies at the same time, usually through an ETF, and it's relatively easy to do. You don't need a lot of knowledge, you just buy that one ETF, and if you keep doing that, then you will eventually just follow that index and go up and down with the market. The downside, though, is that it's less fun and it's not possible to make an outperformance because you're following the index, and with a little bit of extra cost for transactions, you're just slightly behind the index. Examples of index investing is the S&P 500 and the MSCI World. And it's good to know that about half of my portfolio is index investing. So to me, it's still a very important pillar in my own portfolio. So we now know several types of investing, and it's good to think about which type of investor you are. The good thing is that you don't have to necessarily pick just one. You can actually make a combination of different strategies. Personally, I'm a big fan of quality investing, and I'm trying to learn more about it and try to invest more in quality companies. But I did all the different types of investing that I just mentioned. I'm trying to focus less and less on value investing because I think that's not focusing on the future, but more on the short term that it will catch up. And I want a portfolio that can sort of stand for longer than 1 or 2 years. I want it to perform well for the upcoming 20 years. So my main focus is on quality. There is a little bit of dividend, there's a little bit of growth, but quality is the highest focus. So we're at the end of the presentation. Thanks for watching. I hope you got some value out of this. If you did, then please subscribe. If you have any questions or just want to say something, please leave a comment and leave a like if you liked the video. Thanks a lot, and I hope to see you next time.